Hi, this is Rob with Federal Finance CPE. Today, we're covering a subject that's near and dear to my heart, and that's internal controls in the federal government. Why they exist, and how do you perform an internal control assessment? We're going to cover all the phases over the next few modules, and it's going to take you from start to finish. So this particular module, we're going to cover four things. One is we're going to talk about what controls are. Given to give you a couple classifications and definitions that are going to increase your knowledge and give you some working vocabulary. Next, we're going to talk about why are internal controls required? What's the law and regulations that make you having to do these at your agency? The third thing we're going to cover is just go over how a year at a federal agency will go with the internal control assessment. And the fourth thing we're going to talk about is at the end of the day, once your internal control assessment is done, what is the end product? What does all this work produce? Let's get started. So the learning objectives for today, we're going to define the internal controls, distinguish the internal control from an internal control system. We're going to classify controls using a manual, automated, and preventative and detective framework. We're going to classify controls using manual, automated, and preventative and detective. We're going to identify the roles of FMFIA, OMB A-123, and the GAO Green Book in the internal control framework. We're going to recognize an annual cycle for A-123 and some key milestones. Throughout our examples, we're going to actually follow a person and see how they deal with some of the challenges. And this person is Maria Chen. She's new to federal internal controls as an assessor. She does have 9 years of audit experience, but is new to federal agencies. So let's see what she encounters. She's 3 weeks into her new role as an internal control assessor at a federal law enforcement agency. Reviewing the prior year's statement of budgetary resources, she finds there's a line that doubled year over year. And there's no documentation that she can find that explains why. Now she knows, being an auditor, they're going to ask why. And her predecessor is gone. So the question goes, what should she do first? Well, she's going to be thinking of what are the internal controls around this line? And she's going to ask the question, are the internal controls around this line strong enough? And does this increase just indicate a change in business? Or is this change indicating something went wrong? So with that, let's talk about internal controls. An internal control is a process that's designed to provide reasonable assurance that an organization objectives will be achieved. So these are key elements to this. It's a process. These are steps people take. What do they provide? It provides reasonable assurance. Now, this is different between absolute assurance. Absolute assurance means no matter what, you're going to be confident that you achieve your goal. Reasonable assurance, now, it's a little less. This is where you start dealing with cost benefit. Just think, if I wanted to make sure the assets of an agency are completely secure, I could lock them down. I could have 24/7 surveillance over them. I could even wall them in where nobody could even get to them. That would give me absolute assurance that my physical assets are safeguarded. But that's not realistic. Now, reasonable assurance. So you're going to have some risk, but that comes down to cost benefit because you want to make sure, yes, I can achieve my goals and I'm not overly cumbersome, but I also have reasonable assurance. So I can reasonably rely on that the information I have is complete, accurate, and any changes that are made are by people who are authorized and they're valid. And the next element is objectives. So every agency, whether you're federal government, local government, or commercial, has objectives. Commercial, a lot of times they try to make money, right? They have their objectives. But for the federal government, you usually are providing services to the citizens. Maybe you're doing investigations. Maybe you're handling taxes and revenue. So you have objectives. You want to make sure your payments go to legitimate sources. You prevent waste, fraud, and abuse. You also want to provide services to the citizens on a timely basis. So this is what an internal control does. It's not 100%, that reasonable assurance, but it's a process. So it's not just paperwork, and it helps you make your goals likely to be achieved. Now, a control is only one piece of the puzzle. It's part of your entire internal control system, which is multiple internal controls. But another way of thinking about it is these three components. You have people, process, and technology. So you have continuous operations, and controls are built in. Different processes are built in that your people follow. Some of these processes are actually what they do, right, day to day. Some of this is electronic workflows. Some of this is training to make sure people have the competence to achieve their goal, to do their work. Now, internal control system affects the entire agency. As I mentioned, people, process, technology. It is everywhere and it runs constantly, because if it's not continuously running, then that's where you could have issues. That's where you lose that assurance. That's where your objectives might not be met. Now, when we talk about controls, there's really two main aspects to each, and that's whether it's a preventative or detective control, and whether it's a manual or automated control. We'll start with the preventive and detective. Preventive controls prevent things from occurring. Detective controls detect it. Now, manual, a person is doing something physically, right? It's a manual control. Somebody has to take action, while an automated control is run automatically with IT. Here we have a matrix that essentially every control is going to fit into one of these buckets. So for a preventive manual, maybe a supervisor approves something before it's posted. But then a detective manual, maybe the supervisor reviews a report of all the posts for the day, and then they see if the amounts are correct or if there's some unusual activity. Now you could have a preventive automated control. Now this is going to be where a system blocks a transaction. A classic example in federal accounting is budgetary controls. We want to prevent our allotments from exceeding our apportionments. Automatically, the system would stop it. Now, if it's the detective automated control, maybe this is a report or a process that flags exceptions as they run, unusual amounts that require review later. The running of that report, creating the information that's going to be used, that could be a detective automated control. All right, so we're going to go a little deeper now. So preventive controls, remember, stops before it happens. So preventative controls act before the risk occurs. You'll see here on the right side, we have our generic error, right? And the control kind of acts like a gate. It's a gatekeeper. It's preventing it from going through. It's going to keep your records clean. Mentioned system checks, supervisor approvals before posting. This is a key thing, before it's recorded. Segregation of duties helps prevent it. It prevents individuals from having the ability to circumvent controls, and requiring training, right, before you have system access. That's going to hopefully prevent errors from happening. Now we have our detective controls. This is catching it afterwards. The transaction's already been recorded. And the key thing to detective controls not only is, will they find an error, but when will they find an error? And how soon after the error occurs will it be corrected? And that's the implication. It will be corrected. If it's not corrected, then is the control actually working? So maybe you do monthly reconciliations of subledgers to the trial balance, or from different systems. Do you reconcile your CARS reports back to your trial balance? Make sure your fund balance with Treasury is correct. Maybe you do variance analysis, budget to actual, and that'll allow you to follow up on any unexpected differences. And just generic, when you hear exception reports, right? Those are detective. Things have happened already. But once again, key to detective controls is speed. How long after an event occurs, let's say how long after an error occurs, will it take for it to be corrected? This is where you have to use judgment. Monthly could be good enough. Quarterly, maybe. Annually, I don't know. You're going to have to ask that yourself, but think of it. How long would the error exist and before it's corrected? Now we talk about the manual and automated. So the manual controls, people execute the control. Action has to be taken, and it's only going to be as good. The control is only going to be as good as the actual control operator. That's where that training comes in, right? So a supervisor reviews and approves a journal entry. That's only as good as a supervisor, right? Maybe a property accountant takes an inventory. It's a physical control, manual controls. Maybe the CFO certifies the financial statements. They have to do that manually. This is not an automation. Then we go to the automated controls. These are classic system controls. I always think of it kind of like edit checks. These are rules that are embedded. Humans are not involved in automated controls. So mentioned before some of those budgetary controls. This is a great example because as you move through the budgetary accounts, you essentially shouldn't exceed the balance of the one before. So your apportionments should always be more than your allotments, which should be more than your commitments, and you have your obligations. So that's where you are able to control it systematically with those controls. So a good way of thinking about it is you have your input, your rule, pass, fail. If it passes, it goes on and can be recorded. If it fails, your control stops it. Workflows are also electronic workflows are also automated controls. While reviews of, let's say, a journal entry is done manually, right? And you apply an electronic signature, but then your automated control kind of picks it up and can make sure that the journal entry is flowed to the appropriate approver for the next one. And that it follows the rules for approval by your organization. Now, you might be asking yourself, hey, Rob, I see you're kind of mixing up automated and manual controls with that journal entry. No, I think that's just really pointing out the reality is a lot of our controls are mixtures, right? You have that manual review, a person's reviewing it, but the days of doing paper reviews are almost gone. So you do rely on your automated controls. I'm going back to that example with the journal entry. Yes, somebody applies a signature, but if it flows to the wrong person that shouldn't be approving, then I would say your automated control isn't functioning correctly. So now that we covered these types of controls, we're going to pick back up with Maria. So she's new to this agency and she's trying to identify some different controls out there. And let's see what we can do. So first scenario we have. So her financial system, so scenario one is the financial system rejects any obligation that would exceed the available amounts that have been allotted. Is this going to be a preventative or detective control? This is going to be a preventative control. Now you have automated or manual. This is going to be an automated control. The system does it. So now let's look at scenario two. The CFO reviews a monthly reconciliation between the subsidiary ledger and the general ledger. This control is a detective control. It occurs after everything's been recorded. And it is a manual control because the CFO is manually looking at the reports and they're manually making the call. So scenario three, a budget analyst validates that there is a budget available before a contract officer signs a contract. Now this is going to be a preventive control. They're going in the system, they're making sure there's budget available before a contract is signed and funds are obligated. And it's going to be manual because it's a human going in and making sure. So now we've covered internal controls. Let's go deeper and talk about why are we even doing controls from a legal and regulatory foundation? Because the reality is we don't do whatever we want in the federal government, right? We do what's required because we're trying to be good stewards of taxpayer dollars. So here's the three levels I think about when I think of internal controls. First is the law, FMFIA, the Federal Managers Financial Integrity Act of 1982. This created the requirement. Congress did that. So this is ultimately the why, the law. The next is the standards. So this is the Green Book from the Government Accountability Office, the standards for internal control in the federal government. These are, as I said, the standards of what we would consider appropriate internal controls in federal agencies. So this is the what, right? The what should we be aiming for? Now we have the policy, the regulations, OMB Circular A-123. This is management's responsibility for internal controls. And this is guidance from OMB on essentially how to implement the law. It's coming from the executive branch, right? So the laws from FMFIA, which actually directs GAO to create the standards, and OMB A-123 is executing those standards. All right, so let's talk about FMFIA, or Public Law Number 97-255. This came out in 1982, and while it requires a number of things, it essentially requires agency heads to establish internal controls and report annually to the President and Congress on their effectiveness. So who does this law affect? Agency heads. So what does it do, though? It establishes the need for internal controls. It establishes the requirement to assess their effectiveness and report it. So now when does this control happen? Now it happens annually, and it's to the President and Congress. And this is really why your agency head has to sign the assurance statement. Now we talk about the standards. So internal controls is great, but when you have a number of federal agencies trying to meet the same goal, but without a standard, without the rules, if you will, or a measuring stick, you're going to get a bunch of different results. So that's why having GAO create the standards is useful, because then everybody knows what they should be aiming for. So now the Green Book defines the components of an effective internal control system as having these 5 components: control environment, risk assessment, control activity, information and communication, and monitoring. Now we could go deeper in all of these as the internal controls. All right. Now we can go deeper in all of these, but just know all 5 of these must be present and operating to have an effective internal control system. And if I didn't need to mention it before, the Green Book's called the Green Book because the cover page is green. Now we have the policy. Now OMB Circular A-123. Now OMB Circular A-123 is how the executive branch implements FMFIA. Now, the circular provides like a framework for agencies to use. It provides definitions, once again, directs agencies how they're going to report. It gets down to even how to report the assurance statement and how to define. And the implementation guide, when it first came out, even showed how to sample. So this document, defines the scope. It kind of sets out the policy, and it gives you your required reporting. So your assurance statement. Now, Maria's job throughout this course is essentially going to be following A-123. She's working in a federal law enforcement agency, which is in the executive branch. So she's going to be executing her job responsibilities to support this. All right. Then we mentioned before the assurance statement. I'm showing you right now. This is NASA's assurance statement from the FY 2025. You can find the assurance statements in the annual financial reports of federal agencies. Now, this is required, right? The assurance statement is required, and it's the agency head that has to sign off. This isn't something that can be delegated down. So that's why it's very important, our work we do, because it builds to this. And I know sometimes it can feel a little anticlimactic that a whole year's worth of work comes down to 1 page, but that's ultimately what we're doing. We are giving your agency head the support and information they need to execute the law faithfully, honestly, and accurately. So now, a quick knowledge check. An agency CFO wants to know which document defines what effective internal control looks like. What document should you point to? Is it FMFIA, because that's the statute that requests the requirement? Is it OMB Circular A-123 because it provides implementation framework? Is it GAO Green Book because it defines components of internal controls? Or is it the assurance statement because that's the output? Well, it's going to be the Green Book. So it's the one that defines what effective internal controls look like and includes the 5 components that the system must have. So now, this question might come up for you, and it's definitely going to come up for Maria because she might think, okay, so I have the internal controls over financial reporting assessment. This seems very similar to the financial statement audit. Now, I don't know how many times I've supported federal agencies when I'm talking to business and people will go to me and when I'm trying to get some information, they go, I already spoke to you all about this last week. Now, what they really meant is I already spoke to the external auditors who are conducting the financial statement audit, not the internal control assessors. This is an important distinction that you need to work with to make sure you know and the business knows. And it's because the work we do, the reality is it does add work to others. So we want to let them know and help dispel any myths that we are duplicating work because we are different teams with different goals. So we can do that by looking here at this table, right? So who's conducting each of these? Well, if you're doing an internal control assessment, it's agency management. So you're working for the agencies. You are internal. A lot of times they do have contractor support, but it is internal. Now, if it's a financial statement audit, these are usually run by the Office of Inspector Generals, right, of the agencies. Many times they are contracted out to an independent public accountant that does this, but those are contractors. But it's done by the OIG. Now, the focus for the internal control of financial reporting assessments, internal controls, specifically internal controls over financial reporting, though internal controls over reporting is in scope if your agency is far enough along in OMB A-123. Now, for financial statement audit, their focus is going to be on the financial statement, the balances, for the most part. I'm going to say an asterisk because there are a few agencies that do receive an opinion on their internal controls. So then, if that's the case, you are going to get a lot of attention and interest from the financial statement auditors. But if you are not one of those agencies that gets an opinion on internal controls financial reporting, internal controls will still be looked at as part of the audit, but it's not going to be the focus. Now, the win, both of these really can cover the entire fiscal year. And honestly, I found anecdotally throughout the years, they follow an assessment cycle about the same. So a lot of times financial statement auditors will actually start the kickoff for the year, let's say February, March, and then they conduct their conduct their audit throughout all the way to the end of the fiscal year. And once the books are closed, they finish their audit. So you would expect then the audit report to be done approximately mid-November. Internal control assessments, they're going to finish earlier because the assurance statement actually feeds into the annual financial report, and the annual financial report also has to have that audit report, right? So they're done earlier, but it is throughout the year. The agencies that are really on it will actually start their risk assessment and planning towards the end of the calendar year, maybe the beginning of the calendar year, but then they end up doing their walkthroughs, test of design, and to actual sampling throughout the summer and wrapping up right before the fiscal year ends. So then, we mentioned this before, the output. So if you're doing the internal control assessment, the assurance statement, that's your output. That's ultimately what it builds to. Now, the financial statement audit, it builds to an opinion. Both. It still makes me laugh sometimes when I think about all the work we do throughout the year leads to essentially a paragraph or two in an assurance statement, but that paragraph or two means so much and is built on so much work, hard work done by all us professionals that we don't want to overlook it, but sometimes you have to laugh that that's what it builds to. So we mentioned it briefly, but the assessment calendar, right? Now the cycle runs all year. And if you had enough time and effort, you could just be running the internal control assessment constantly in multiple iterations. But during Q1 of a fiscal year, that's usually where you're doing your risk assessment and planning and scoping. You're deciding, okay, what am I going to look at this year? Maybe your agency has determined high risk, low risk. You're making those decisions, right? Because at the end of the day, we don't have unlimited resources. We can't test everything all the time. Now, quarter two, January, February, March, you're going to be doing your kickoff meetings with business owners, control owners throughout your agency. You're going to start your walkthroughs, schedule them, and start your test of design. Now, Q3, you're going to be doing completing your test of design, and you're also going to be doing your operating effectiveness test of controls. And you're going to be drafting your preliminary findings, specifically as things come up, observations are made, you're going to record them and share them. And in Q4, you're going to finish your testing. You're going to have findings classified, aggregate them, help determine what's the health of internal controls at your agency. And it's going to support the creation of the assurance statement that your agency head will have to sign. So let's go back to Maria. Remember her? So she had the SBR line at her agency that doubled. The team couldn't explain what happened. So this potentially could mean months of undetected errors. Digging into it, what Maria found was that the system removed an edit check that blocked obligations from exceeding allotments. So this is that automated preventive control was removed. And it'd gone away for months. Nobody noticed it. So her diagnosis was an automated preventative control failed. And there is no monitoring or detective control that caught it. So let's have our second knowledge check. So a new federal agency is setting up an internal control of financial reporting program. The CFO says, I want every transaction over $1 million to require 2 electronic signatures applied in the financial system before the transaction posts. How would you classify this control activity? Now, this is a bit of a tricky question, and I'm going to tell you my thoughts. My thoughts is first, you have the manual aspect of this control, right? A preventative manual control of a review, right? 2 signatures, which implies 2 reviews, a primary and a secondary. Those are individuals, accountants who are knowledgeable enough to understand federal accounting, who see the documentation required for the entry, and they make the entry using the appropriate accounts. Now, the second part I would say is this is actually also a automated control because we have our system controls. You have your workflow going from reviewer 1 to reviewer 2, following the policy of your agency, because not just any 2 people can sign these journal entries. It's going to be 2 accountants, 2 people who have appropriate knowledge. So this is kind of a complex question because this was multiple aspects, but that's just pointing out to me is that nowadays with as much reliance we have on our IT systems and as much as we rely on electronic workflow and lack of paper, many of our controls are actually a mixture of manual and automated, but you can break them down into those individual components. So with that, our current module is complete. We're going to get tee yourself up for the next one, so see you there. And this is once again Rob with Federal Finance CPE, and thank you for learning with us, and I look forward to our next conversation.